Good evening, guys. I believe you can hear me. Good evening. Sure you had a great weekend. Good evening. Good evening. If you can hear me loud and clear, please drop a comment. You can hear me loud and clear. You can see my screen clearly. Please drop a comment. Drop a comment. You're welcome to today's weekly market outlook. You're welcome. You're welcome. It's so excited to have you in today's session. I hope you're fully prepared for this coming week, for this new week. You're welcome. You're welcome. You're welcome. You're welcome. You're welcome. Please confirm you can hear me loud and clear. Also confirm you can see my screen. In the next few minutes, we'll start the class. In the next 2-3 minutes, we'll start the class. Confirm you can see my screen. You can also hear me loud and clear. Good evening, good evening, good evening. We'll start in the class in a few minutes. You're welcome, you're welcome. Start dropping your questions, and if you have any if your questions and pairs you want us to analyze tonight, start dropping them in the comment section. If there's any pair you want us to analyze together tonight, drop it in the comment section. You're welcome, you're welcome. Dropping them in the comment section. All right. Good evening, Mr. Joseph. Good evening, Mr. Williams. Okay. Mr. Anayo. Good evening. Okay. You guys are welcome. You're welcome. Okay. Please, if you have questions or pairs you want us to analyze tonight, please drop it in the comment section. Okay, drop it in the comment section. If you have any pair you want us to analyze together tonight, please drop it in the comment section. Mr. Hope, good evening. Good evening. I hope you all are prepared for this week's business. I hope you're prepared for the week's business. You all are welcome. You're welcome. You're welcome. So let's go straight to. So we'll start by looking at the calendar. You can see we have a lot of red folders this coming week. A lot of red folders, and I think Wednesday FOMC will be released on Wednesday. FOMC. That's one of the major news for the week. Okay, so tomorrow, Monday, we're expecting CPI from Swiss franc by 7:30 a.m. Nigerian time, and by 3 p.m., ISM services PMI data will be released from the United States. Then on Tuesday, we have on the New Zealand employment change will be released, and also unemployment rate will be released by 11:45 p.m. Nigerian time. And on Wednesday, we have FOMC. FOMC. If you don't know how to trade the news, please avoid trading USD pairs on Wednesday. If you don't know how to trade the fundamentals, you don't know how to trade the news, please avoid trading USD pairs on Wednesday. Avoid it. Avoid it. I think FOMC is even worse than NFP. FOMC is worse than NFP. So avoid trading the news. If you don't know how to trade the news, please avoid it. It's by 7 p.m. Nigerian time. 7 p.m. Nigerian time. Okay. And if you want to trade USD pairs on Wednesday, please just go for a few pips. Maybe you could look for your trade setup in London session. Okay. If you see a good trade setup in London session, you might want to take the risk. Okay, but ensure you're conservative. Wednesday is not a day you over leverage or take high risk. You have to be very conservative if you're trading on Wednesday. Okay, then on Thursday, Great Britain pounds, Bank of England monetary policy reports, monetary policy summary, MPC official bank rate votes, official bank. So Thursday is for GBP. Thursday is for GBP. Wednesday is for USD pairs. Thursday is for GBP pairs. Then on Thursday, 1:30, unemployment claims will be released by 1:30 p.m. Nigerian time. Then on Friday, Bank of England Governor Bailey speaks. Okay, by 9:40 a.m. Then 1:30 p.m. Nigerian time, Canada will be releasing the employment change and unemployment rate. So let me share with you guys my plan for this week. Okay, taking the fundamentals into consideration, my plan for this week Monday, CHF, USD. One could look for opportunity on USD, CHF, or you trade cross currency pair. JPY pairs, you can trade JPY pairs on Monday. If you don't know how to trade the news, you can trade JPY pairs, but USD, CHF will be volatile on Monday. USD, CHF will be very volatile on Monday. So if the data comes out negative for CHF, if it is negative and ISM services PMI is positive for the dollar, then we could expect maybe that should be buy. Yeah, buy. That should be buy for USD CHF. But please, before you execute a trade, ensure you know the CPI numbers for United States. Okay, ensure you know the CPI number, the previous CPI data that was released for United States. You need to know it before you trade against. So if it is negative for Swiss franc and the previous CPI data that was released for United States is positive, then that would be a good opportunity to buy USD CHF. If CHF Swiss franc CPI is negative and USD CPI is positive, that would be a good time to buy USD CHF. So you could go back and check CPI data for United States. I think it was last week or 2 weeks ago they released on CPI data for United States, I think. So please confirm before you trade it against the Swiss franc. Then on Tuesday will be for New Zealand pairs. So I'm considering trading dollar on Monday, dollar pairs on Monday, and also Wednesday. I will avoid trading dollar pairs on Wednesday. Then on Thursday, I think I will consider trading on dollar pairs. Then on Monday, if I want to trade on Tuesday and Wednesday, I will trade on cross currency pairs, JPY pairs. Okay, that's my plan for the week. I will be trading USD pairs on Monday and on Thursday, Monday and Thursday. We'll be trading USD pairs. Then on Wednesday, I might trade JPY pairs. That's my plan for this week. Okay, that's my plan for this week. Okay, so GJ, Gold, AU, USD card. Good evening, Mr. Adebayo. Good evening, Mr. Chuku. Good evening, Mr. Chuku. Good evening. Thanks for joining. This is the first time I think this is your first time of participating on the live stream. Thanks for joining. Okay, so let's go straight to the chart. So the first thing I want us to look at is DXY. We need to know the trend of the dollar. Okay, let's look at DXY. We also look at Japanese yen to know the strength of the yen. So let's start with dollar index. Okay, so this is dollar index. We'll start with the weekly time frame. Let's start with the weekly time frame. As you can see, it is obvious that dollar index is bullish. It is obvious that dollar index is bullish. The previous week candle was an hammer indicating change in trend from bearish to bullish. Okay, so dollar index is bullish at the moment. You can see the first thing they did was to clear liquidity residing at these previous lows. I think, yeah, they cleared the liquidity residing at these previous lows. You can see liquidity has been cleared. So liquidity has been cleared, and the previous week candle, that's 2 weeks ago, the candle was an AMA indicator. And you can see last week also was bullish also. Last week was bullish. So with what we have on this chart, with this pattern, this candlestick pattern indicates dollar index is bullish at the moment. So only buy dollar this week. Buy dollar this week. Don't sell dollar. Buy dollar this week. Okay. And dollar is likely going to come and fill this imbalances. We have a fair value gap here. We also have a fair value gap here. So this is where I think we still have a fair value gap here. Dollar index might fill this fair value gaps before going bearish. Okay. So this will be my first target for dollar index, 104.10. This will be my first target for dollar index. Okay, but let's go down to lower time frame to see if there could be price retracement. Okay, so you can see what played out here. Can you see what played out here? A fair value gap was created here. A fair value gap was created here. Price pulled back to fill that fair value gap. Can you see that? Can you see that? Price pulled back to fill that fair value gap. So if a 4-hour or 1-hour candle closes above this resistance it's created, that was on Friday, yeah. Created this resistance on Friday, you should buy. Okay, I would buy dollar if 4-hour or 1-hour candle closes above this resistance. That's my take on the dollar. Dollar is bullish at the moment. Dollar is bullish at the moment. Don't sell dollar this coming week. Don't sell dollar. Buy dollar. Buy dollar this coming week. Okay? Buy dollar. So let's look at yen. Yen basket. So let's start with the weekly. So I think yen is bullish at the moment. Okay? I think yen is bullish also. Okay, so you can see last week candle, it was bearish. I think this pullback was to fill this fair value gap. Can you see this fair value gap? The pullback, the retracement, I think, was to fill this fair value gap. That has been achieved, as you can see. This fair value gap has been filled. So if we go down to the next lower time frame, which is daily time frame, and we are able to identify a bullish reversal pattern on the next lower time frame, then we should be considering going bullish. And if you go back here also, we had a resistance here, which became a support. So let's go down to daily. Let's see the pattern that formed on Friday on the daily time frame. So it should be a bullish reversal pattern. Let's see. Okay, so you can see the pattern that formed on Friday. You can see the fair value gap here on daily time frame. And you can see we had a resistance here, which became a support. And I think this is a breaker. This is a breaker block. This move was used to clear the liquidity residing at this previous low. So this is a breaker. We have a breaker and we have a fair value gap. You can see the fair value gap is in confluence with this breaker. You can see that, and see how last Friday candle closed. This is a spinning bottom. This is a spinning bottom. So I expect JPY to be bullish this week. Most likely it would come fill this fair value gap it's created here, this gap, or probably would want to retest this what's it called? Support stone resistance. Okay. It's likely going to come fill this fair value gap or fill or retest this support stone resistance. That's my expectation on Japanese yen. I am bullish on Japanese yen this week. Okay, so let's go down to look 4-hour time frame. Let's see what we have on 4-hour time frame. So you can see on 4-hour time frame, the fact that the market is trading above the last bearish candlestick that formed before this bullish move indicates that there are more demand than supply. Okay, the fact that the market is trading above the high of this last bearish candlestick before this bullish retracement indicates that there is more demand than supply. You can see this retracement was to fill this fair value gap that it created here. You can see this fair value gap has been filled. It has been filled. So I expect the Japanese yen to be bullish this week. It's likely going to come and fill this fair value gap. That's my expectation on Japanese yen. I hope that is clear. Any question? Any question? Any question? Any question? Okay, so let's start with Sir Joseph requested that we look at GJ. Okay, let's start with GJ. So if my bias for yen is, if it is bullish, we expect GJ to sell. Let's see GJ. Okay. If GBP, if yen is bullish, we expect sells on GJ. Okay. Okay, so yeah, let's start with the weekly time frame on GJ. Okay, so you can see on GJ, you can see what we have on GJ. You can see a fair value gap was created on GJ. You can see this fair value gap. There was a fair value gap here on the weekly time frame, and you can see the market has filled that fair value gap. Can you see that? The market has filled that fair value gap, and after filling that fair value gap, if we go down to daily time frame and we are able to identify a bearish reversal pattern on a daily time frame, that would be a sell. Okay, that would be a sell if we're able to identify a bearish pattern on the daily time frame. Let's see. So you can see what we have on the daily time frame. This is a spinning bottom. Can you see that? And on yen basket, we had a bullish spinning bottom. On JPY, you can see we have a bearish spinning top. Can you see that? This is a bearish spinning top, indicating that GBP JPY is bearish. It is bearish. You can see the fair value gap here on the daily time frame. This retracement, I think, was to fill this fair value gap. That they have accomplished, and you can see our last Friday candlestick closed, indicating change in trend. Let's go down to 4 hour. You can see the pattern we're seeing here is the inverse of what we have on yen basket. Can you see that? It is the inverse. You can see market closed below the low of this candle, and you can see we had an hanging man here. We had an hanging man here. So price could retrace probably to come fill this fair value gap or test this level before going bearish. That's my expectation on GBP JPY. Price is likely going to retrace, fill this fair value gap before going bearish. So my bias on GJ is bearish this week. It is bearish. Technically, it is bearish. So it's likely going to come test this resistance on support or fill this fair value gap it created. So that should be your target if you're considering selling GBP JPY. That should be your target. Okay. Wait for price to pull back. It's going to pull back to fill the fair value gap before going bearish. That is what I see on GBP JPY. That is what I see on GBP JPY. So my bias for GBP JPY is bearish. But as you know, we have several major news that will be released from Great Britain. I think it was on Thursday. It's on Thursday, right? We have several major news that will be released from Great Britain. So that could also influence, you can see on Thursday, 12 p.m. From 12 p.m. we have like 4 major news that will be released from. So if there's a good setup before Wednesday, one can take the GBP JPY. If before Wednesday price pulls back, fill the fair value gap, then one could look for sales before Thursday. Okay, if price, let's assume tomorrow price pulls back and fill this fair value gap, look for your sell setup, then you can sell to this zone. Hopefully before Thursday, the market could get to this zone. Okay. By then you should be out of the trade. That's what I see. Sell GBP JPY. I hope that is clear, Mr. Joseph. I hope that is clear, Mr. Joseph. Okay, let's look at other instruments. Let's look at other pairs. Let's look at other pairs. Few minutes, guys. Few minutes. Okay. So let's look at okay, AU and gold. Let's look at AU. Please, if there's any instrument you want me to analyze, please drop it in the comment section. Drop it in the comment section. So Mr. Richard requested for AU and gold, AU and gold, and Mr. Chuku requested for USD card. Okay, so AU gold, USD card. So let's look at GU and EU before we look at AU, USD card, and gold. Okay, so let's start with GBP USD. So if dollar is bullish, we should expect more sales on GBP USD. I caught this move on Friday. If you joined the session we had, the afternoon session we had for NFP, I told you guys the dollar will be bearish. I mean, dollar will be bullish. I expected GBP USD to be bearish, Euro USD to be bearish, and I caught this move. I think I made close to 80 pips on this pair, GBP USD. I sold it, and I made close to 80 pips on GBP USD. And as you can see, it is still very bearish. Let's start with the weekly. So you can see what played out last week. You can see what played out last week. 2 weeks ago, we had what pattern is this? This is a shooting star, a bullish shooting star. And when a bullish shooting star forms, you are expected to wait for the next candlestick to close bearish before you take a sell trade. The next candle must close bearish before you sell. If the shooting star is a bullish shooting star, I call it a bullish shooting star because the body of the candle is bullish. So when you have this pattern, you wait for the next candle to close bearish. And you can see last week candle closed as a shooting star, a bearish shooting star. So what they did last week was to first clear the liquidity that was residing at this previous high. They know a lot of retail traders would have executed sell and their stop losses will be residing at this previous high. So what they did last week was to clear that liquidity. That they have achieved, and they are set to push the price down. Okay, they are set to push price down. So my bias for GBP USD is bearish. It is bearish. Let's go down to daily. Let's see what we have on the daily time frame. Okay, it is bearish. Well, I think price might still do a little retracement. You can see we have a fair value gap here. Price might do a little retracement. I want to say a little retracement between Tuesday and Wednesday. Tuesday candle or Wednesday candle should give us the high for the week. That is my expectation on GBP USD. Okay, it should give us highs for the week on Tuesday or Wednesday. Okay, so that's my take. So expect price to do a little retracement before going bearish. Okay, and I think GBP is coming to fill all this fair value gaps, this liquidity void. It's likely going to fill it this week. It is likely going to fill it this week. But like I said, patiently wait for a retracement. Okay, as you can see, it has not created a high for the week. It has not created a high for the week. So wait for the high of the week to be created, and we should see that on Tuesday or Wednesday. Tuesday or Wednesday before you go bearish on GBP USD. You can see the movement here. You can see this move was to clear the liquidity residing at this equal high, this relative equal high. That's the reason for this bullish move. It swept the liquidity residing at this previous high. I think if we go down to lower time frame, I think a shift in market structure has occurred on lower time frame. Let's see. So this is 4-hour time frame. Okay, this 4-hour time frame. I think the market is trading below this low. That should be a shift in market structure, right? You can see. So a shift in market structure has occurred. But like I said, wait for a retracement. This high is an area of liquidity. This is a shooting star. Most retail traders would have executed sell. And where would they have their stop losses? Their stop losses will be residing at this previous high. So I think they might want to clear that liquidity before continuing with the bearish move. But let's go down to 1 hour. Let's say a fair value gap was created after the formation of the shooting star. Let's see that on 1 hour. Okay, so you can see on 1 hour we have a fair value gap here. So they might want to fill this fair value gap before going bearish. Okay, they might want to come fill this fair value gap before going bearish. Okay, so I want to see price retest this area. Okay, we have a breaker here. There's a breaker here. So I want to see price retest this zone before I will go bearish on GBP USD. I want to see price retest this zone before going bearish on GBP USD. That requires a lot of patience. It requires a lot of patience. Not this is 1.3262. 3262. That's just like 30 pips. Yeah, close to like just say 30 pips from the current market price. 30 pips from the current market price. Okay, so that's my take on GBP USD. Sell. My bias for GBP USD this week is sell. It is sell. Euro USD. Same thing. Sell. Okay. You can see the pattern we have here is similar to what we have on GBP USD. Both pairs are positively correlated. Okay, both pairs are positively correlated. So let's start with the weekly time frame. You can see similar pattern. You can see similar pattern here on Euro USD. Okay, last week, 2 weeks ago, the candle was used to clear liquidity residing at this previous high. You can see it. And last week candle closed bearish. This move was to clear the liquidity residing at this previous high. That they achieved 2 weeks ago. Okay, they achieved that 2 weeks ago, and you can see last week was bearish for Euro USD. It was bearish, so we should expect more bearish move. Okay, Euro USD is likely going to come. This should be the first target. This liquidity here, residing at this low, and we have a fair value gap here. So this is where EU is likely going to come to this level. This is where it's likely going to drop to. Okay, so that's my take on. But let's see daily and 4 hour. Let's see. Okay. So you can see this retracement here, this pullback. This pullback was to fill this fair value gap it created here. That pullback was to fill this fair value gap. You can see that. You can see this pullback was to fill this fair value gap. And after filling that fair value gap, I think it created a fair value gap after the formation of this candle. Let's see on 4 hour, I think it created a fair value gap. Okay, so a lot of retail traders would have executed sell after the formation of this doji. Many would have entered sell, and their stop losses will be residing at this previous high. So there's a high probability they will come for the stop losses. Okay, it's likely they will come for that stop losses. Let's go down to 1 hour. Probably it's created a fair value gap on 1 hour time frame. Okay, so it's either they clear the liquidity or price pulls back to fill this fair value gap it's created here. That's my expectation. This is where I'll be considering going bearish. Okay. If this fair value gap gets filled and a bearish reversal pattern form inside this gap, I will sell. So it's either they fill this gap or come for the liquidity residing at this previous high. Okay. So if price breaks out from this fair value gap, then you should expect price to come for the liquidity residing at this previous high. Okay, that's my expectation on Euro USD. So I'll be considering selling Euro USD in this zone. These are my areas of interest on Euro USD. Okay, and for me to sell Euro USD, the dollar index must be bullish. Okay, I need to look for bullish setup on dollar index. If I can't find bullish setup on dollar index, I won't sell GBP or USD or Euro USD. Dollar index must be bullish. I must confirm that before I will sell Euro USD or GBP USD or Australian dollar USD, Euro New Zealand USD. Okay, so that's my take on Euro USD. I am bearish on Euro USD. I am bearish on GBP USD. Okay, let's look at Australian dollar USD. Bearish also, bearish also on Australian dollar USD. Let's start with the weekly time frame. Okay, so on Australian dollar USD, last week was strongly bullish, and I think price is currently at a key resistance area, I think. Okay, so we had this resistance, support zone resistance, and we had this also. You can see, this, and if you go down to lower time frame, it would be that there's a fair value gap at this area. You go down to lower time frame. Let's just see, let's just confirm that. Let's go down to daily. It could be okay, this is daily, no fair value gap on a daily time frame. Okay, let's see. So price tested that resistance. Let's just see for hour. Let's see what we are on 4 hours. A few minutes. Okay. So on 4 hour, do we have a fair value gap here on 4 hour? So you can see we had fair value gaps. You can see on 4 hour, we had a fair value gap here. We had a fair value gap here. We had a fair value gap here. So I think that's the reason for that retracement. So that fair value gap on the 4 hour time frame has been filled. It has been filled. Okay. It has been filled. Okay. So last week candle strongly bullish. Let's go down to daily. Let's see how last Friday candle closed. I think we have a bearish reversal pattern on the daily time frame. No, sorry, we are on the daily time frame. Okay. Let's go down to 4 hour. So you can see the pattern we have on 4 hour. Can you see the pattern? Shooting star. The next candle has closed bearish. Can you see that? We had a shooting star. The next candle has closed bearish. This is a sell setup. This is a sell setup. Don't argue with the chart, okay? We trade what we see on the chart. Okay, so this is a bearish setup. This is a bearish setup, and Australian dollar USD is likely going to come fill this fair value gap. It's likely going to come fill this fair value gap. This is at discounts. This is at discount. So what they did the previous weeks was to clear liquidity residing at this previous high. That was what they did. This high. That was what they did. I think on Friday, they had to clear the liquidity. So we should expect sales on Australian dollar USD. But let's see, there could be a little retracement to the upside before selling. Let's see. I think a fair value gap was created on lower time frame. So let's see 15 minutes. Okay, so this is what we have on 15 minutes. So I would like to see price retrace, clear the liquidity. You can see this area is an area of liquidity. There's a high probability they will come for these highs. There is a high probability they will come for these highs. And you can see we have a gap here that has not been filled. Okay, we have a gap here that has not been filled. But because of this mitigation block, they might not come to fill this fair value gap. Okay, they might not come to fill this fair value gap because of this mitigation block. So I would expect price to come clear the liquidity residing at this previous high before going bearish on Australian dollar USD. That's my take on Australian dollar USD. Australian dollar USD will come for this liquidity. This will be the next target for Australian dollar USD. I'll be considering selling from, I want to see price pull up before going bearish. That's my expectation on Australian dollar USD. Exactly. Good. Okay, that's my take on Australian dollar USD. Please don't mind my drawing. Okay, I want to see price pull back, let the liquidity reside at this previous high, then go bearish on Australian dollar USD. I hope that is clear. I hope that is clear. That's my take on Australian dollar USD. Okay. Are you guys still here? Are you still here? Are you still here? Okay, let's look at some gold. Let's look at gold. Gold. Let's look at gold. 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 Let's start with the weekly. Okay, so you can see the pattern we have on gold. This is a bearish reversal pattern on gold. 2 weeks ago, the candle closed as a shooting star 2 weeks ago. And last week also was strongly bearish. So gold is still bearish. Okay, gold is still bearish. Gold is still bearish. Okay, my bias on the weekly time frame is bearish. Weekly is bearish. Let's go down to daily. So we have this on the daily time frame. Still bearish also. You can see what we had there. This is a shooting star. Price broke out from this support. You can see this was a strong support. You can see how price tested that level several times. You can see it. This was a key support level. Price tested that level at least 3 times before it broke out. First attempt, second attempt, and the third attempt before it broke out from that support. So that tells me gold is bearish. Gold is bearish, and gold is likely going to come test this resistance stone support, and it could come fill this fair value gap too, because this is a discount area. This is a discount area. If you apply your Fibonacci from the swing low to swing high, this is discount, and we have a fair value gap at this discount area. So it might, or this should be the first target for gold. This resistance stone support, that should be the next target for gold. But before gold sells to that zone, I think it's going to retrace. It's going to retrace. Let's go down to, you can see last week candle closed as a doji on a daily time frame, indicating change in trend from bearish to bullish. So let's see what we have on 4 hour. So I think gold is likely going to come fill this fair value gap before going bearish. That's what I see on gold. There's a fair value gap here. Okay, and this fair value gap is in confluence with this resistance or support stone resistance. You can see this level is a key. You can see it's a key support stone resistance. Can you see it? Take it back. You can see. You can see. So most retail traders have executed sell after the formation of this pattern. And where would they have their stop losses? To be residing at this high or a few pips above this high. So there's a high probability they will come clear the liquidity residing at this previous high before going bearish. That's my position on gold. I want to see price pull back, fill this gap, okay, before going bearish. That's my expectation on gold. That is my expectation on gold. I hope that is clear. That's my position on gold. So we look at AU, looked at gold. Which other instrument do you want us to look at? Let me know in the comment section. Which other instrument? Which other instrument do you want us to look at? Okay, USD card. Mr. Chuku says we should look at, okay, USD card. Okay, let's look at USD card. USD card. USD card. So if GBP USD is bearish, Australian dollar USD is bearish, Euro USD is bearish, USD card should give us a bullish setup. USD card should give us a bullish setup. So let's start with the weekly time frame. You can see what we have on the weekly time frame. We had this is an inverted hammer. We had a spinning bottom. Okay? These are indication that the sellers are becoming weaker. This indicates that the sellers are becoming weaker. On USD card, we have a fair value gap here on USD card that has not been filled. So it's also possible for price to come fill this fair value gap before going bullish. Okay, remember we are expecting retracement on GUEU. So USD card might use that opportunity to also fill this fair value gap before going bullish. Okay, it might use that opportunity also to fill this fair value gap before going bullish. Let's go down to daily. Let's see what we have on the daily time frame. Okay, so with what we have on a daily time frame, I still expect USD card to drop. USD card is going to sell. Okay, it's going to clear the liquidity residing at these lows. It's going to clear it before going bullish. So if you want to buy USD card, patiently wait for the liquidity residing at this low to be cleared. There is a 70 to 80% probability is going to come for this low. So patiently wait for this low to be cleared before you buy USD card. Okay. After this low gets cleared, look for your buy setup. Look for your buy setup before you buy. Okay. And USD card might come fill this fair value gap. Okay. That is my expectation on USD card this week. It's likely going to come fill this fair value gap. Okay. So that's my take on USD card. My bias for USD card this week is bullish. It is bullish. It is bullish. It is bullish. Any other question? Is there any other instrument you want us to look at? Let me know in the comment section. Is there any other instrument you want us to look at? Is there any other instrument you want us to look at? Let me know in the comment section. Do you have any question? Do you have any question? Do you have any question? Any question? Any question? Please do not overtrade this week. Don't overtrade this week. Okay? Don't overtrade. 1 or 2 trades in a day is okay. 1 or 2 trades in a day. Maximum should be 2 trades in a day. Don't overtrade. The reason most traders blow their account is overtrading and over leveraging. That is why most traders blow their accounts. 1 or 2 trades per day. Personally, I don't execute more than maybe 4 or 5 trades in a week. 4 or 5 trades. Maximum is 5 trades in a week. 5 trades in a week. If you are new to trading, stick to 1 to 2 trades in a day. Ensure you don't risk maximum 2%. Don't risk more than 2% of your capital on any trade. 2%. 2%. You don't lose more than 2% in a day. 2% in a day. Not just 2% on every trade you execute. Because if I say 2% on every trade you execute, it means you could go ahead and execute 5 trades. 2% on 5 trades, that's 10%. In a day, you shouldn't risk more than 2% of your capital. 2% maximum. Maximum. If you are new to trading, you can even reduce your risk to 1% to start with. Start with 1%. Once you've mastered the strategy you're trading with, then you can now increase it to 1.5 or 2%. 2% is for those who are experienced, those who have mastered their strategy. Okay, but if you are new to trading, you can stick to 1%. It's just that most of you are starting with very small capital. You are starting with $50 or you are starting with $100. You cannot trade with 1%. 1% is $1. 1% of $100 is $1. It means that the market risk, if you want to risk $1 on every trade, the market risk you will take on every trade must not exceed 10 pips. It must not exceed 10 pips. And if you are using 10 pips, trading major currency pairs, I don't even see any pair that you can trade that you'll be using 10 pips as stop loss. If you are using 10 pips as stop loss, the truth is that your hit rate will be high. Most times they will be hitting your stop loss. They will be going for your stop loss. They will be hunting for your stop loss if you are using 10 pips. So I don't think there's a strategy that would employ you using 10 pips as stop loss. So if you have $100, then your risk will be high. You'll be risking close to $3 to $4. $3 to $4. If you have a good strategy, at least that your market risk should not exceed 30, 40 pips on any trade. I believe if a market goes against you 30, 40 pips, then something is wrong in the market. You have to reevaluate, re-strategize. 30, 40 pips, maximum 40 pips. If a trade goes against me 40 pips, I want to exit that trade. I want to exit that trade to be sure I did proper analysis. Okay, so that's my own take. Okay, so don't risk more than 2% maximum. But like I said, if your capital is less than $200, if you're trading my strategy, you would risk more than 2% because the minimum risk, market risk is, the maximum is 40 pips. 40 pips. And if you use the minimum lot size, which is 0.01, that will be $4. So if you have $100, that will be 4% of your capital. If you have $50, I think that should be like 8%. 8% of your capital. Okay, so I think that will be all for tonight's session. For those of you in the VIP group, we'll be meeting tomorrow. Okay, we'll have a Zoom call tomorrow by 10 a.m. 10 a.m. Then our next class will be on Tuesday. Tuesday, Wednesday. I believe we will see a good setup on Tuesday or Wednesday. Okay, on Tuesday or Wednesday there will be a good setup that we can trade. So I'll be on YouTube live on Tuesday 10 a.m. So I really want to appreciate every one of you for your participation. If you are yet to give the video a thumbs up, please do that. And if this is your first time participating on the live stream, I really want to appreciate you for joining the class. And I believe you got value from the class. Please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Once more, I want to say a big thank you to every one of you who participated in tonight's session. And my prayer for you all is that this week will be a profitable week for you all in the name of Jesus. You all will excel this week. You will excel this week. You will make new discovery this week. Profit every day of this week. But please, you need to stick to your trading plan. You need to stick to your trading plan. You should have a strategy. If you don't have a strategy, develop a strategy or you learn my own strategy. I have a strategy. If you check the description of this video, the strategy I shared in that video, just click on the link. You have access to that video. It's free. Okay, you have access to it. It's a very good, profitable strategy. Just click on that link and go and watch the video and learn my strategy. Okay, so please stick to your trading plan. Stick to your trading plan. Sometimes I will see by you are saying sell. If what you are saying is sell and you are convinced that it's a sell, you can go ahead and execute the trade. Please, I do make mistakes too. It's not every time I get it right. Okay, no one is perfect in this business. We make mistakes. No matter how experienced you are, you make mistakes. I do make mistakes also, and that is why I use stop loss. If I'm 100% sure of the market move, I wouldn't be using stop loss. Okay, no one is 100% certain or perfect. There's no perfection in this business. Losses are inevitable. Acknowledge that if you want to succeed in trading. Losses are inevitable. You will make losses. Okay. The rule is that you ensure that your profit, your reward is always higher than the risk you take. Okay. That is the rule. Ensure that your reward is always higher than the risk. If you have a good strategy with three that has a risk reward of 1 to 3, you just need to win just 2 or 3 trades out of 10 trades. You'll be profitable. If your risk reward is 1 to 3, 1 to 3, you just out of 10 trades, just win 3 trades, which is very possible. It is very possible. If you are risking $1 to make $3, just win 3 out of 10 trades. Okay, so $1 times, let's say you lose 7 trades, that is $7. Then you win how many trades? You win 3 trades. 3 times 3, that is $9. 9 minus 7, at the end of the day, you will have like 20 pips profit. 20 pips profit. Okay, so ensure most of you are losing money because, or you are experiencing huge drawdown because your risk is like 5 times. Some of you, your risk is like 10 times the reward. That's why you are blowing account. That's why you are experiencing huge drawdown in your account. Just fix that. Fix that. Fix that. Change it from risking 10 for 1. Go 1 to 10. Just change it. That is all you need to become a profitable trader. Your risk reward, just work on it. How can I reduce my risk? That should be your mindset. How can I reduce my risk to make more? That should be your mindset. That should be what you should be meditating on every day. Every day. That's what I meditate on every day. How can I reduce my risk to make more? There was a time I was using 60 pips, 70 pips as stop loss. I had to reduce it because if I'm risking 70 pips, what would be my reward on that trade? I had to reduce it. At first, I reduced it to 50. I still felt that 50 was too high. I had to bring it back to 40. Now I'm reducing it to 30 pips. And I'm contemplating on bringing it to 20 pips. Are you getting me? So that should be your meditation. You know, that should be your concern. How can I make more? Risk less to make more. Are you getting me? That should be, just keep meditating on that. You will get it. Okay? Keep meditating on how you can reduce your risk, reduce risk, increase reward. Okay? Your risk reward should not go below 1 to 2. Your risk reward should not go below 1 to 2. I believe in the scripture that says, if you seek, you will find. If you seek, you will find. If you keep meditating on it, you will definitely get an answer. You will definitely find the solution. That's one thing I believe. But most of you don't spend time meditating or studying, and if you don't have much information, much knowledge, what would you meditate on? Okay, so do meditate, meditate, study. Just ensure that your risk is less, And those of you that don't use stop loss, those of you that don't use stop loss, you keep blowing funds. Those of you that don't use stop loss, you will keep blowing funds. You keep losing money. So this week, ensure that you apply stop loss on all your trades. If you don't want to blow accounts, ensure you use stop loss on all your trade. Nothing like mental stop loss. Don't use mental stop loss. Before you enter the trade, you already knew where that trade will be invalidated. You already knew. Set your stop loss there. Set your stop loss there. You have the low of the candle. You have the high of the candle. You know that if the market breaks those levels, your that trade has been invalidated. Exit the trade. Put your stop loss there. Don't say when it gets there, I will close it manually. Some of you are not that experienced. Don't close, set your stop loss. Once it gets there, let the broker close the trade. Let the platform close the trade for you. Don't use mental stop loss. Because 90% of the time, you will not close the trade when it gets to that level. You will not close it. You will not be open and praying that it will reverse, it will reverse, it will reverse, it will reverse. Before you know, your account, you receive margin call and the account will blow. Please, the one you've lost is enough. Okay? The one dollar rate now is 1,000, I think 1,600 per dollar now. 1,600 per dollar. $10 is 16,000 naira. 16,000 naira. Not many people earn up to 100,000 naira in a month. Not many people. Very few. So if you are losing 16,000 16,000 naira, let's say you lose, let's say like 4 times, that's almost 60 something thousand naira from your salary. So please reduce risk. Please reduce risk. That will be all for tonight's session. I wish you all a wonderful night.